How's it going, everybody? It's Stock Picks by Tim, and I've got a new stock to talk to you today about, and it is none other than NAT, or Nordic American Tankers. Make sure you like and subscribe. I do put out videos every day, and I talk about stocks, crypto, just current news in the market, that kind of thing, but I, of course, appreciate it, and it does help me out a lot. And this is a very small cap stock. It's only a few hundred million, and it's been on a downtrend for quite a while now. It does seem to find a base right under $2, and it is sitting right there at about 2. So Alexander Hansen, the board member of Nordic American Tankers, or the son of the founder, chairman, and CEO, he recently bought 50,000 shares at about 198 per share. And he also did purchase 50,000 November 26th, so it is a pretty regular thing you will see in history that he's been buying these. This definitely adds to the positives when considering NAT stock, and it's just good to see insiders buying the shares instead of selling the shares that they own. Now, there is a chance that they're just buying shares to kind of fluff up the stock, make it look more attractive to new investors. And the same thing with the dividend. It is kind of a red flag to see that they're still offering a dividend when they aren't profitable. There was a time that they were profitable, but they aren't right now. And revenues have been kind of all over the place. Earnings per share has been negative pretty consistently. They are right around 25 years of offering a dividend, so they're probably just trying to keep that title. But yeah, that definitely raises a red flag, and it is one thing to think about. Going over to tip ranks, it does have an average 44% upside, so that is pretty nice to see, about a price target of $3. And when you look into the technicals, which I'll show you in a second here, it seems like that's very obtainable, and it is looking ready for a rebound. And this is also a stock that actually pays out a dividend, a 2.97%, roughly 3% dividend, but it is a reasonable dividend. But this is a risky stock though. They are burning cash, they are not profitable. You see that there's no PE ratio, but it is a very small market cap at about 347 million. And you will notice here that historically, right under $2 seems like a pretty solid buy with quite a big upside afterwards. And if you did buy this now, you would be missing out on that dividend. So you will get in for the next one a few months from now. I'm considering buying a few shares right around $2 or under, and just wanted to keep this on your radar. I would like to see their earnings improve because they have been like all over the place. They reported 18 million in revenue back in May, and then they reported only 16 million revenue in August, and then recently here, November, they reported 9 million in revenue. It is a nice sign to see that it's rebounding here recently. Just remember when you're investing in this that they are burning cash. This is a potentially risky play, but in my opinion, at the price, you got to consider that. It's not at all like buying it in the $5 range or the $3 range even. I think it's at a pretty good price here where it's at. And one thing you could even consider doing is placing a stop loss here under roughly 180. And if it drops under there, it kicks you out. Obviously, there must be something wrong. It'll be looking a lot better if they can do good on their next revenue. So that might even be a thing to do, is potentially watch this until the next time they report their revenue in a couple months. Their next earnings report is going to be in mid-February, so it might be a good idea to watch that and see if they can increase their revenue from the last quarter. But yeah, I mean, it seems to be all over the place, and they are likely going to need to issue more shares at some point if they do run out of that cash flow. They do have roughly 30 million, but they of course have debt and they aren't making a profit, so it is one thing to consider. I did recently read that they had a few ships that were 55 million each, and those ships are now worth 75 million. So it is one thing to consider that they do have a lot of assets. But that's basically all I got for you guys. Just a quick update on a potential stock to watch and keep an eye on. And if you wanted to collect that dividend in the meantime, keep in mind that you would miss that next dividend on 21 December because you had to get in before 7th December. So for me, I personally would want to wait to see how earnings does, maybe even buy right before then as a gambling play and set a stop loss. This definitely to me would be more of a short-term stock. So do your research, guys, as always, and I will see you next time.